Good afternoon, this is Chris Brecher with the free video for simpler trading and the Chart Patterns Mastery free video. What's today about? Today is about just day trading and trying to dismiss what's going on in the tariff news. So what we were doing in here was showing the resistance areas and then finding the trigger to play to the downside. So I'll show you what we're talking about. So you had these gaps. You see the gaps from last night. Those ugly gaps, whether it's the Russell on the right or the ES on the left. When it approaches that, because it doesn't have to go to it, you're looking for your short entry. So your short entry on the Russell on the right was that defined trend line. You then short right here, or you wait for the oversold rally to test the neckline. If you think that's a one-off, later in the day, the S&P did the same thing. Got to the gap, formed a top, had that oversold rally to the neckline. That was good for about 15 points. So we're going to stay with that tomorrow of the day trading and trying not to overanalyze anything. But I will tell you we're coming in the short the TLT. Now, why? Because the TLT had the same kind of thing. What do I mean by that? It rallied here, right to the resistance. Like I said, it's a zone, but at the zone, you're going then to a shorter term chart to time your entry. So we have calendars. We'll see what happens because we have a lot of economic reports coming up, but we have calendars going right when it hit that top. So we're short the TLT. All we're doing in there is we're trying to take differing factors. And I'll show you. So we're not just saying, oh, it's going to resistance, we're shorting. No, what we're doing is we're going to the TLT on the left, and we're seeing this. That's a lot of lines in here. We'll take that off. There. You're seeing that resistance in that area, whether it's the 50 moving average or price resistance. I think price resistance is more important, but as you see, it was a confluence of the two. But in the meantime, on the right, the Dow Jones Commodity Index went straight up. So just keep that in mind right here. So you see on the left, we could go to a 15-minute chart and you see that spike. But on the right, you see the spike in the Dow Jones Commodity Index that corresponded almost with the top in the TLT. So you're combining the resistance in the TLT with the rally in the commodities. The commodity rally, bonds hate inflation. So if the commodities go up, then the TLT is more likely to go down. And that's exactly what happened. So pretty exciting about that. So I hope you like that. We're going to just day trade tomorrow and go from there. Take care. Good afternoon, everyone. This is Chris Brecher, and I'm Senior Managing Director of Stocks at Simpler Trading. Thanks so much for watching this video. If you like our content, please leave us a like and a comment down below. Also, be sure to subscribe to our channel and click the bell notification icon so you never miss any of our great new content coming out. Good trading, and we'll see you at the next video. Take care.